Good morning, everyone. Today is the 25th of July. Today is our SPY cycle pattern of a temporary bottom trend. You see here, Temp-Bottom 102. That is the 25th. We are in trending mode. Let's talk about what's going on over the last couple of days. Let me spread this back out and let's take a look at what we're talking about. Fact, 1 second here while I go to daily and close the front door. It's nice and cool down here, but not as cool as it was up in Pismo where I was. So anyway, let's take a look here and let's get down here to the 30 minutes. So yesterday I did a video and I was thinking about what was actually going on yesterday. And we really had what I called a Kamala Shakeout. And it comes down to the fact that we had a big news event. And it started happening basically Monday, Tuesday, right over here. So Biden resigns on Sunday, this is the weekend, Friday to Monday. And we had moderately, fairly strong collapse prior to that week. And it went into alignment with my cycle patterns. Monday and Tuesday were fairly well aligned with my cycle patterns. We were looking at a pretty solid basing upward movement here, staying within this channel, moving into a sideways panel, then potentially moving into a breakaway upward trend today. But what the heck happened was Biden resigned. And then there was a couple of days of, call it flux, where we did not know ideally what would happen. And over the first Monday, Tuesday of this week, Kamala Harris fairly well solidified her position as the new running mate against Trump. And I believe that yesterday's news with regards to Google, Tesla, and the pending uncertainty of Kamala Harris, what are her expectations compared to Biden? What are her policies compared to Biden? I mean, she is an untested, in my opinion, an untested political leader. She was only in the Senate for about a year before she ran as vice president. I can't recall too many accomplishments as vice president, other than working with the Senate and the House, which do all the legwork to try to get bills and laws passed. So I'm looking at yesterday as a real Kamala shakeout, and that's what I'm calling it from here on out. I think we're looking at a pattern. Get rid of these. I think we're looking at a pattern here of a big breakdown with regards to what to expect for Kamala Harris. And I think it's going to probably continue to play out as a moderate price shakeout related to, forward expectations and political certainty. I think we have a lot of uncertainty. I think traders knew what they were kind of expecting with either a Trump or a Biden presidency. Again, no matter who the outcome was, I think we kind of knew what to expect. But with this new Kamala issue, what is her platform? What is her policy? How liberal will she be? Is she going to be carry the torch forward, or is she going to be dramatic change? And like I said, it kind of reminds me of Barack Obama when he was moved into the presidency, a very short-term senator who really came up out of different background. Now, granted, Kamala Harris has been a prosecutor, and I'm not trying to get political here, but I'm just saying that it leads to, in my opinion, a bunch of uncertainty, and really a bunch of uncertainty with regards to market expectations. At this point, it's kind of like a monkey wrench has been thrown in the gears, and now we don't know how the engine's going to perform. So if we come back over here to daily and try to take a look at this and spread this back out, make this bigger, So here's our Kamala what the heck scenario. Get rid of some of these. Leave that. Spread this out. Get rid of some of these. Okay, I'll leave the rest for now. We're looking at a potential rally pattern here. Okay, so our temporary bottom pattern should set up some sort of a base or bottom back over here, moving moderately higher, somewhere into this kind of range, if the patterns follow through. If we get more of a shakeout, we would be watching for, you know, a continued breakdown, which again, this is a lower channel. Let me show you this channel here, and to highlight the fact that this is a lower channel originating from way back here off of these base and bottom across this low. We're already deeply below that channel. It makes sense to me that we would be attempting to find a base or a bottom today and attempting to rally higher. So back down here on the 30-minute, if we were to look at what I think is going to be the most likely case, we're opening at, or currently at 540.84 pre-market, this little dash line. And what I think is most likely the case here is to open somewhere in this area, maybe a little higher, just below this lower dashed orange line, and move into a moderate melt up, possibly moving back up into this area, giving us a fairly solid upward move today. And again, I'm sticking to what I believe the patterns are telling us. And remember, the patterns themselves, I'll make this light green. The patterns themselves are like psychology, psychological character traits of the market. So, you know, a dumb example is that I wake up yesterday in hypothetically a good mood, feeling good, ready to go. Like I told you, I had a long day yesterday, lots of driving, and everything's running smooth. But then you get on the road, everything's good, and you run into some headaches. You get a ticket, hypothetically. I didn't get one. And you run into traffic, which I did run into LA traffic, which is pretty much normal. If you've ever been to LA or live in LA, you know what it's like to try to get from Calabasas down below LAX, which again, folks, if you've never done it, I'm going to guess that that's about 22 miles maybe. But it's pretty much stop and go traffic for the most part. So 22 miles at 5 to 10 miles an hour is a lot of fun in LA. And it's so funny because I used to live up in the San Fernando Valley when I was a kid off White Oak. And anyway, long and short of it, back in those days, the valley was still fairly wide open. Remember, that was the late 60s, early 70s. And the valley was, I mean, yeah, there were, it was full, but not nearly as full as it is right now. That was 45, 55 years ago. So anyway, long and short of it, you start off with a psychological pattern, which is what we had yesterday, and then outside events can disrupt that pattern. And that's really where you have to be aware of the A and B scenario. So you remember yesterday I talked yesterday afternoon when I did my Kamala Shakeout video, I was talking about an A versus B setup. So B, failure, and A is success. So I set these up in a manner, every video I try to do is set up around a concept of A or B. And yesterday I drew this line right here, this blue line, indicating that in order for the Harami pattern to be successful, we had to stay above this blue line level. And that means that as long as we stayed above this blue line level and melted back upward, which was this drawing here, I'll make this kind of a, I don't know, purple. As long as we followed this line somewhat, getting back above this 551 area, 552 area, then I thought the Harami line would play out. If we didn't do that and we broke below this level, I said yesterday, then we would have failure. And I drew a downward arrow saying it would continue to sell down on some excess news event. And that's exactly what happened. We broke downward. Now today, I'm going to tell you here that this is where I expect the markets to trend. And I would warn you that, you know, if we get down below this 538 level, let's call it right in this area, I would be very cautious of some continued shakeout, because at this point, we're getting into some deep Fibonacci levels, and it becomes very critical for you to understand that we are moving into basing and bottoming that go way back. Okay, you're looking at Fibonacci levels across this area. You can see this pink line with the gap. This is a big gap. Look here. You see this huge gap right here? This is a big gap that's been left open. I will draw it. That's why I highlighted this, so you can see it. And now you wonder, well, gee, Brad, why do you have all of these levels on your chart? Well, you see that how important they are. This is a big gap, and this huge gap could very likely turn into a target range for a low today. So understand that we could very easily, if market opens into weakness, move into this downward gap, fill the gap, and then try to set up some sort of a bottom coming out of it. So understand that if we do not find very solid support from the very beginning of the market trend, we could move down to 437, 436, maybe a little below 436, call it 436 and a quarter to 437 roughly, and fill that gap before building a base and attempting to move higher. I still believe we build a base and attempt to move higher, which is what the bottom pattern would be. And then tomorrow's pattern, just so you know, would also be a counter trend right here, counter trend top resistance pattern. Now, typically a top resistance pattern looks something like this. Rolls up, tries to find a top, and it rolls down. But because of the fact that it's counter trend, we would be looking for a roll down, try to find a base, and then roll higher again. And these are kind of where we're at with the pattern setups right now, the SPY cycle patterns. And as long as nothing disrupts those patterns, if this was a, excuse me, if this was a sufficient enough shakeout, then we're going to see a pretty good move, I think, a reversion move back up to the upside, back up into this 553, 555 area. So secondarily, when I talked about this chart, this is a daily standard deviation chart, and this is called a linear regression. You can get it right over here, come down to the regression trend, and essentially the way it works is you pick a starting point and an end point. Come back over here and I'll show you. You pick a starting point and an end point. There's a deeper one. So let's just go into this downtrend. So you pick a starting point and an end point, come to linear regression. You pick the top, and I normally pick rejection area. So I have a rejection area here and a rejection area here. I'll pick the middle area and come down here. Good solid rejection, rejection, rejection right over here. I'll pick this. And what this does is it measures 1x, 2x, or 3x, in this case 3x, standard deviation. And standard deviation is a very common tool used by institutional traders to determine volatility. And a lot of times what they will do is they will, a typical move is going to be within the 2x standard deviation channel. It's when you start to get outside of it with a 3x or 4x move that you're starting to get some real wild trending. So understand, if we come back over here to a weekly chart, and give you an example. Here's 2000. We'll go over to here. So here's our 2x and our 3x channeling. And let's do another 3x right here. So we will pick this bar down to, I'm assuming we went to this bar or this bar. Okay, and we'll just extend this out to 3. Okay, there you go. So there's our 3x range. So now you can see that we had a bit of a false breakout here on the 3x range, trying to find a bottom, rolled back into the range, stalled, and then rolled out of it right here, giving us good solid confirmation of a trend. Now, at this point, as we move lower, you can see that we stayed within the 2x range, outside the 3x range here, back into the 2x range. We were up at the upper end of the 2x range here, and now we're back down to the midpoint level. So where we're at with this current trend is very comfortably within a moderate uptrend. Yeah, we're pulling back, guaranteed, but very comfortably within a 2x channeling range, really above the middle of the 2x channeling range. We would have a long way to go to work down into real concern, which will be back over here. We are in a solid uptrend. And then if you come down to the daily, we are actually breaking down already from the channel. So you can see here, we've broken down below the 2x channel here. This is daily. We are in a downtrend, and we are moving into this downward trend. We would need to get back above this 549 area, call it, in this case, 555 area, moving downward every day, in order to break away from this channel. And at that point, we would move into this deeper channel, which is the weekly channel, or back into this daily channel here, trending higher. So this is weekly. Change this a little bit. Change the, let's see, the bottom area will make purple, and the up area will make light cyan, and there we go. So understand, folks, that we are in this downward channel, and we have yet to break below the 3.0 weekly channel. We're close to it. We might get outside of it like we did way back out here, just outside of the 3.0 channel, and then revert back to the upside. And this would be very common. This would be a common reversal at the 3x standard deviation. We are currently at or very close to the 3x standard deviation, and I believe we're looking for a base or a bottom setting up over here, trying to rally higher. With regards to my new trending system, my new pressure system, we are already in bearish trending on the 2-minute. We are expecting continued, as long as it stays below this 382, called the Ultimate 382 level. We are expecting more downward trending. We would have to get above 5, call it 543.50 for upward trending. So remember these numbers, 543.50. And in this case, we would have to get above 551. And in this case, we would have to get above 551. And in this case, which is the 30-minute, we would have to get above 557. So we have a long way to go to be able to get into real bullish trending. And I'm putting these numbers here so you can see from the start that as long as we stay below 543.50, we're looking for bearish trending. Okay. Now, granted, I'm expecting a counter trend to the upside, but I wouldn't be overly aggressive with trying to trade anything that goes up, any bullish trend, until we got above this 543 level on a 2-minute, or 551 level on a 5-minute, or 551 level on a 10-minute, or the current level 557 on a 30-minute. That means that we have to get all the way back up here in this area to try to look for a real long. Now, as this opens, we'll probably get new data. So this level could drop down into here, probably will, 551, 552, and I will update those as they happen, but I want to be very clear, okay? We are in a bearish trend. You should not be aggressively trading the upside. You should be consciously waiting for confirmation of a rollover, waiting for price to move at least above this 543 and 551 level, looking for some clear upward opportunity. And we do not have any indication yet that my base and bottoming pattern that I'm showing you here is really going to take place. This is all speculation. And remember, we have these levels here, which are our key make or break level. So at this point, bearish. At this point, bullish. At this point, bullish. At this point, bearish. Those are the predominant trends. Bearish, bullish. We would not be looking to try to take longs here. Theoretically, simply, and if you did, they'd be very small positions and very short trades. I want to be very clear because it appears, even though I go over the data, some people just aren't getting it yet. So again, filling this window, as I showed you here, is a very strong potential. We could see price move downward, trying to fill that gap that occurred way back here. Remember, that was way back here in June 11th. So we could see price come back down here, fill this gap, find a base, find a bottom down near 436, and then rally back up out of it. Or we could find immediate support in the morning and try to rally back up into this area based on the SPY cycle patterns. Remember, this is a big downward, what I call Kamala Shakeout. So I want you to be aware that, we are predominantly bearish. Even though the patterns are predicting an upward trend, I need you to understand that we need some sort of real confirmation before we can see that the pattern is going to play out relatively successfully. Okay, a little bit of a long video today. I'm going to leave it there and we'll go forward here in a bit. I'll do another video just after the market opens.